Next up, we've got Alex Dorsch, the Managing Director and CEO of Chalice Mining.
Thanks, Joe. Good morning, everyone. Nice to be back at this conference talking about nickel, even though it is a little unloved in the market right now. This is the sort of the times you can, when you typically look back and think to yourself, maybe there was a buying opportunity out there. So to present today on Chalice and really talk to you about WA's new nickel copper PGE frontier in the western part of the state. Our cautionary statements, disclosures, these are available on the website or on the ASX platform if you'd like to read those in full. So Chalice is an ASX-200 green metals explorer developer. Our purpose is to find the metals needed to decarbonise the world, which we term the green metals. I guess that's become a very mainstream concept now, that the world's going to be very much short of these critical metals. And our aspiration is to create a world-class multi-district province in the West Yilgarn. So obviously most of the nickel in WA has been centric on areas like Forrestania, Kambalda, the Fraser Range, even the northern part of the state. I guess the western part of WA is somewhat unloved and really unexplored. So that's where we really focus. It's a two-part portfolio. We've got our Gonville nickel copper PGE project. This is the largest orthomagmatic nickel copper PGE discovery in the last 20 years. So it gives you a sense of, you know, they're quite unique and rare occurrences, magmatic sulfide deposits, particularly in the scale that what we've found. It's a world-class resource and we're progressing that towards development. And then surrounding that, we have about 9,500 square kilometres of largely unexplored tenure. We've got a team of geologists really scouring over that, and we've spent the last 2 years really doing the early stage work, and we're really now getting to the pointy end where we're ready to go out and start really drilling some wildcat targets. So I'll take you through that a bit later. Some of our achievements listed there, and from a corporate perspective, obviously our market cap and our valuation has pulled back significantly in a very difficult market. At the moment, our enterprise value is around about 770 million, so you get not only the biggest, one of the biggest discoveries in the last 20 years, but you get all that tenure surrounding it on sale at the moment. And what we've seen over the last few months is we've had great support from some of our larger stable holders, and to call out one in particular, Tim Goyder, the founder of the company, purchased another 3% of the company just over the last few weeks. So that's an amazing sign of support. And what we've also seen is, I guess, the vast majority of our top 20 holders increase their positions over the last few weeks. So our Gonville nickel copper PGE project, it is a little different because it is quite heavy in PGEs, copper and cobalt relative to the typical Eastern Goldfields nickel, komatiite nickel project. It's a strategic and rare green metals project. I think most people will be familiar. It's only just outside of Perth here. As Matt said, really, it's got a Class 1 flavour to it. That means it has that potential for a Western or green premium. So IRA-compliant metals is becoming the key battleground for electric vehicles, and we obviously have IRA-compliant metals in the ground here. We've scoped a project that has world-class sustainability metrics, a low carbon intensity, namely because of that sulfide mineralogy, but also because the WA grid is decarbonising as we speak. It's going to make a very substantial contribution to the WA economy over decades. And what we've outlined is an executable Tier 1 scale development project. So at the moment, we've only looked at open pit scenarios. There's lots more to do in terms of looking at our known deeper mineralisation that we've intersected in terms of bringing that in an underground option. But we've scoped two different scale cases to reflect some development optionality. We have a 15 million tonne per annum processing case as well as a 30 million tonne per annum processing case. So you can see there nickel between 9,000 and 16,000 tonnes of nickel per annum, which would make it one of the bigger nickel mines in WA. But then on top of that, you've got hundreds of thousands of ounces of PGEs, 10 to 16,000 tonnes of copper and 800 to 1,400 tonnes of cobalt per year over a very long modelled life. So this is one of those, I guess, emerging very large projects. It is a bulk sort of low grade project which has some sensitivities. But really, I guess at this point, at a scoping study level, really now we're sort of given the market an indicative feel of what it could look like, and now we really get to the engineering and really sort of start to look at the optimizations. So we've outlined something, a project with compelling returns on investment is going to be very competitive. I think what you want to see out of a scoping study is that the asset will be in a safe part of the cost curve. So we're going to sit in the second quartile with all-in cash costs of $160 to $230 per ounce, all-in sustaining costs around about $400 per ounce. And at the moment, so the PGE basket price is sitting around $12.50 US. And that's a very, very attractive position to be for a long life asset. And being an open pit asset near Perth, we expect to be insulated from a lot of that cost escalation that the global PGE and nickel industry is experiencing right now. Very good free cash generation over, like I said, 18 plus years, short payback period of 2 years, looking to, I guess, construct the project later this decade and get into production just before the end of the decade. There's a lot of upside and development optionality here with this resource. It is a very unique, large resource. Like I said, we haven't incorporated any underground mining options yet, but we can see clear value proposition from doing that. We know that higher grade material also has much higher recoveries, so it makes sense that the value per tonne that we can bring forward from an underground scenario is very attractive. Plus the resource, the optimal flow sheet, how we get to market, these things are all now really, I guess, the trade-offs and the optimizations that we could do during the pre-feasibility study. So the asset is already, I guess, a strategic one for Australia in terms of its resource, and I guess when it gets into production, it will be a very, very important one for the country. I guess just given that, you know, Indonesia and China very much dominate the nickel supply chain, the PGEs are dominated by Russia and South Africa. So platinum, palladium, nickel, cobalt, you know, for the most part, critical minerals. For most governments, there's a little bit of discussion around those points, and especially for copper at the moment, there's I think a growing case for that as well. But yeah, like I said, I guess the reality here is that the West needs to get its act together and really start developing projects like this as a matter of urgency to counter the growing influence of non-Western aligned and non-IRA compliant jurisdictions. So like I said, the Australian government, as has been mentioned here this morning by the Minister as well as Matt, the Australian government, the West Australian government is absolutely behind the industry to back, you know, projects like this being constructed to counter that growing influence of China and other countries. We've also launched a strategic partnering process for the project. Really, we've had lots of inbound interest on our nickel and cobalt in particular, given how important those metals are and given how few nickel cobalt class 1 type discoveries there are around, and very, very little uncommitted nickel cobalt supply out there. I guess we've now received the first round of expressions of interest through that process, and now we're working closely with potential partners who can help us develop this project. So it's really got the potential to become a long life asset. You can see some of the metrics here. Tier 1 scale production profile, highly competitive financial metrics. Now I should mention these are indicative metrics at a scoping study level, so you need to anticipate that now we've got some engineering to do and some optimizations to apply. You can see there a capex of 1.6 to 2.3 billion Australian dollars, NPV of 2.8 to 4.2 billion Australian dollars, an IRR that's 26% in both cases, and a short payback period. So that's, I guess, what's very attractive. The scale, the quality of the resource, the fact that it is sticking out of the ground, that really is the reasons why it's going to be such a lucrative asset to own. You can see the cash build chart there on the left-hand side. Depending on the scale, you can really leverage, I guess, prices over time. So we have the ability here to drop the cutoff grade over time as, prices move, and really can see the leverage there you get from scale to higher prices in the future. It is a nickel asset. Nickel's going to make up 24% of the revenue stream, but you can see there, I guess, palladium being 55% of the revenue stream. It is quite different, and I think you don't see many assets like this. So both Gonville cases are positioned in the second quartile. I've shown the PGE industry cost curve here. You could arguably show this asset on the nickel industry cost curve with all the other metals as byproduct credits, and the costs are overwhelmingly negative in nickel terms because you have such good byproduct credits from the other metals. But here we've put it, I guess, as a primary PGE mine net of the base metal credits. So we sit between Russia on the very bottom left of the cost curve, negative cash costs, huge resource base, but huge operational political challenges. Obviously, Russia, the invasion of Ukraine, that has put a big question mark over Russia's, position in the supply chain for the metals like this, but also nickel, cobalt. And then on the right-hand side of Gonville sits largely South African producers. So these South African mines are very old, very deep, in some cases more than 2 kilometres deep, very narrow underground mines. And they are suffering from operationally, suffering a huge amount of cost escalation, a lot of operational challenges around the availability of things like power. So at the moment, South Africa is looking at something like 4 to 6 hours a day without any electricity because they've got, I guess, some severe political and operational challenges in that country. So their costs are escalating at something like 10 to 15% year on year, which means that third, fourth quartile of the cost curve is just going to go up and up over time. So at the moment, the all-in sustaining costs for that fourth quartile average about $1,500 per ounce. So basically, the spot market is telling us at the moment that is an unsustainable level of pricing. The prices must increase to north of $1,500 per ounce to keep those suppliers in business. And so that's why we've assumed a long-term price of $2,000 over a 20-year period between 2029 and 2050, roughly. And you can see why that is the case, just given looking at that cost escalation you're seeing through particularly South Africa. So the resource, this is a schematic of the resource. I'm sure most people have seen it. It strikes over about 2 kilometres. The deepest resource block is down at 800 metres below surface. There's 560 million tonnes in situ here at around 0.54% nickel equivalent. So imagine a Mount Keith or a Yakabindi style of open pittable deposit. This is, I guess, how we sort of view this type of asset. The difference here being that a lot of the revenue, a lot of the value is in these other metals, palladium and nickel and cobalt and copper in particular. 16 million ounces of contained PGEs, 860,000 tonnes of contained nickel. So, there's not many 860,000 tonne contained nickel sulfide projects around the world at the moment. You could probably count them on one hand. So these things are getting very, very competitive to be a part of and certainly quite challenging to discover, like I said, once in 20-year type occurrences. The resource remains open. We've got 5 rigs continuing to drill on it. So this is going to continue to grow as we study, as we engineer the project. Expect the resource numbers to grow as well. We're looking at I guess some development optionality with this project. There is a grade tonnage curve here, and I guess we've scoped the project at this point on the left-hand side of that curve. There are options here to go higher grade, smaller, more selective mining to begin with. Like I said, once we've incorporated that underground scenario, we believe we will ultimately gravitate to the left-hand side of that chart over the longer term. But this is the role now of the PFS to really sort of get into the detail here to work out exactly what is that right size for that first module of processing throughput. Resource remains open, down dip, like I said, so 5 rigs growing the deposit at the moment. We've had some fantastic PGE copper-rich zones recently at depth, from sort of 400 metres to 1,100 metres below surface. We're getting some fantastic grades, fantastic widths. So we know, this deposit has, grades that are an order of magnitude higher than the average resource grade in a pit. So that gives it that optionality, and it also is a challenge to work out how to optimise. So I guess we're continuing to drill there. We're really sort of now plugging the gaps between sort of that mineralisation at about 1,000 metres below surface, all the way up dip to the bottom of the pit shells at about 400 metres. And we believe sort of, targeting some of that early underground options, really getting some of that high grade forward in the mine plan will be meaningful. And given that these higher grade blocks will have much higher metal recoveries than what we see from the open pit average as well. The flow sheet, to borrow a term from Matt, I guess we're looking at some midstream options, looking at getting into that battery precursor market with our nickel and cobalt. I think there's obviously a plans there with IGO and Walu to build an integrated facility in Kwinana. We see ourselves as a potential, client or them as a potential customer of our MHP product. There's lots of options there to work out exactly how to optimise our pathway to market. And you can see there, we basically, at the moment, have scoped a largely base metals flow sheet and separating the copper and floating the copper away first, and then separating and floating the nickel into a hydromet process to get that battery-grade MHP. We're looking at the moment, we're doing some test work at the moment about combining those two and effectively dropping that copper float stage, and we do think that will give some upside to the metal recoveries, as we've stated. And I guess that's the work we're now working through to understand exactly sort of where those trade-offs lie between, I guess, maximising the metal recoveries and I guess, the OPEX and associated payability considerations in terms of those products. So there are inherent options here with this resource, and also lots of upside. And I guess some of the orange text there on that page lists out some of the near-term priorities for the team. I've already mentioned early high-grade underground mining options. I guess long-hole open stoping is the primary focus, but also sub-level caving is another area that we're looking at. Geomet domaining of the deposit. We know this deposit is very variable in terms of grade. It also has multiple different mineralogy styles within it, so we need to understand how the plant is going to, how those different blocks and how those different mineralogies are going to behave through the plant. For a scoping study, at a scoping study level, we've taken a very averaged view of those data points. Now we need to really get much more granular to work out really where the mine scheduler needs to focus on, which blocks are going to behave better through the process plant, and therefore how can we get them forward in the mine plan. The bulk flotation test work I mentioned, we've obviously got a strategic partnering process underway, like I said as well. And I think the government, we're hearing certainly the right things from government around direct, government support for projects. I guess particularly in relation to supporting infrastructure, we think that is an area that the government will focus on next, and at both state and federal level to support projects like this. In terms of the project timeline, I guess we've completed scoping study now. We anticipate an 18-month PFS followed by a 12-month FS, and then an FID in 2026, which would lead to first production in 2029. I guess big tier one types of projects don't come out of the ground overnight. These are big engineering and project management exercises. So I think this is a realistic but also aggressive schedule. And I think what you see around the world is that the West really probably struggles to, and capital markets struggle to understand the sort of lag that is involved between, I guess, the demand lever coming from the market and how quickly supply can respond. So that's where prices can really behave in very odd ways. And for those who've been watching this project for some time know that the Gonville project is just 2 kilometres of a 30-kilometre magmatic belt that we've found just outside of Perth here. We've got some encouraging signs of mineralisation over at least 10 kilometres of this strike length, and we're shortly going to start drilling on about the northern 20 kilometres of strike length that we haven't really tested at all as yet. So there's lots of good-looking geochemical, geophysical targets at the northern end of the Julimar complex that are sort of screaming out for a drill hole, and really that's what it's all about. We're hoping that we can obviously come up with that next high-grade nickel sulfide zone through that work. You can see, if you look at that in 3 dimensions, just the southern 10 kilometres of strike length, the Gonville resource just makes up a very small part of what is a very extensive, intrusive complex here. So everywhere we've drilled a hole into that grey shape there, we're getting mineralisation, which says to our geologists there's a very, very big, extensive system here. So expect to see the resource tonnes just grow over time as we keep drilling. Like I said, we were intending to start late Q3. That's been pushed back a little bit with our permit. We're anticipating that permit to come in the coming weeks. So strategic partnering, the pre-feasibility study very much underway. Looking at those underground mining options and flow sheet optimisations is the near-term priority. We're also looking at things like ore sorting, some of the more selective techniques out there in the market. That's a growing space at the moment in terms of optimising projects like this. and that takes us through sort of into next year, where we begin the permitting process, as it says there, in early 2024. And I should emphasise that the western part of WA, I guess we are the predominant player in that part of the world. It is very much possible that we will find multiple styles of mineralisation along this western part of WA. We're really gearing up for a major regional push over the next sort of 6 to 9 months, where we're going to drill about 10 new targets that we've defined across the province. So that's a very exciting time for the company. And really the prize is that sort of what we found early in Gonville, that 3% nickel, 1.2% copper, 10 grams per tonne PGEs. We know that's the tenor of the massive sulphide mineralisation. So really we want to target those sorts of that sort of prize to begin with. So we've got 100% of a new long life, low cost, low carbon green metals project in WA. It is a very unique asset. It's on sale at the moment in the market. Chalice's team has a track record of really creating value for shareholders, and as you've seen, there's a significant amount of exploration upside here in our portfolio. So I encourage you to take a look and come speak to us at the booth if you're interested. Thank you.